So we're back to the email, the trade update that I sent you. Now let's say, for example, that I'm going to X this out and change this. I can say none. And let's say that this trade that I originally that we were sending to you, now you get a new trade update, and this is a trade that's in there. Okay, we're saying we're going to buy. Actually, let's change that. We're going to buy the euro at 2,500. We're putting a stop loss at 1,2400, 100 pips, right? And we're going to close 100% of the trade in profit at 2,700. Now, normally we don't do it that way, quite that way. We would actually take profit between the 2,500 and 27 mark. We would take profit in chunks, boom, 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 all the way up. And then eventually we move our stop loss back to break even, because that way if the trade goes up, we take some profit, then it swings back down. We at least close the trade at the rest of the trade at zero. We still made profit, okay? But we'll explain more of that later. So we're going to take this trade and we're going to enter it into software using the equity management system that we just talked about, okay? So let's go to the FX Solutions software, and we're going to go over here. We're going to find the Euro US dollar, and we are going to enter, because we're at 27.19, we want the price to drop down to 2,500. So we're going to do a buy entry limit at 2,500. Okay, now we said that one $10,000 lot is equivalent to $1 into my trading account per lot per pip. Okay, so we want to do 10 of those. Okay, so every time that trade moves up or down 1 pip, it is $10. So if it moves 100 pips down against us, it's $10 per pip, which is $1,000. If we got stopped out at our 100 pip stop loss, we only lost $1,000 of our $50,000 balance up here, which is 2% of our account. Are you with me? Okay, so we put that in, and our stop we said was at 2,400, and we're going to close this thing out at 2,700. Now let's do this. Go over the numbers again. We're buying at 2,500. If the trade goes against us, we lost $1,000, which is 2% of our account balance of 50,000. Right? You can live with that. That's not going to shake you up. But if the trade goes for us, fully to the direction that we think it's going to go, then we gained 200 pips, which we made $2,000, which is 4% of our account balance. Right? You can see at 4%, you don't need a lot of trades every month if you understand and follow this process of your risk to reward ratio, and follow the equity guidelines of how much you should leverage per account, per trade, and how much you should leverage on your account balance total between your total trades. Okay? So you push save, and there you go. So again, do not trade more than 2% of your account balance on one given trade maximum. I only do 1.5%. And sometimes I do 0.5 or 1%, depending if I'm in 5 or 6 trades at once. I cut it down. I spread that 5% total. That is my game plan amongst all of the trades. And okay, it should be pretty self-explanatory at this point. But listen, when you start breaking out of this mode and start getting cocky and start going against this formula, you're ultimately going to get your butt kicked, and you're going to start having some losses, and then you're going to revenge trade, and you're going to have even more losses. I've watched this. I had a friend of mine. I watched him take a $30,000 account to $87,000 in 3 weeks. Unbelievable. It was brilliant. And then he leveraged too much, got really cocky. He lost a couple of trades, tried to win them back, and in the process kept leveraging more percent, higher percent, making stupid trades instead of kicking back and stopping it and waiting. And he took that account in 3 days from $87,000 to $3,000. Now, if you were married, you just got a divorce notice. Okay? So listen to me. If you get to where you get seem to get on a losing streak, and you're losing, and you're just not winning, and you're frustrated, and you feel yourself wanting to just click the button and pull the trigger, you need to stop trading for a couple of days. Go play golf, go relax, spend time with your family, get back into the mindset of a calculated business person that you are, and stop getting into the gambler's mentality. Follow the equity management system we just outlined here. It's very simple to follow, guys. It's simple math. A first grader can calculate the numbers with a calculator. It's really easy. But the people who are going to have the spoils, the people who are going to win in the end, are the people who follow an equity management plan. People who don't are going to get slaughtered. All right? Hope that you enjoyed the video. Again, to click the button underneath this video to download Chris Lorry's Face the Trader Within. You need to read that, and I would read that often until you get it into your head. And hey, for those of you who want to get my winning trades sent directly to your inbox, and in 2011, we got 8,475 pips over a 12-month period. If you want to see how we can send you those trades directly to your inbox, go to the description below, and you'll see the information there, and you can go there and get registered for free. All right?